Our next witness is Mr. Ron Overton. He's the Vice President and General Manager of Overton Industries International in Mooresville, Indiana. Overton has specialized in carbide tooling for over 40 years. Mr. Overton is testifying on behalf of the National Tooling and Machining Association that represents the precision custom manufacturing industry. He's also testifying on behalf of the Precision Metalforming Association, which represents the $91 billion metalforming industry of North America. Welcome, sir.
Thank you. Madam Chair, Ranking Member Graves, members of the committee, thank you for the opportunity to testify today. My name is Ron Overton, President of Overton Industries, based in Mooresville, Indiana. In addition to my role overseeing day-to-day operations of our tool and die manufacturing business, I also serve as the current chairman of the National Tooling Machining Association, the NTMA, which is partnered with the Precision Metalforming Association, PMA, in Washington to speak with one voice on behalf of small middle market manufacturers, including thousands of North American automotive suppliers. My father founded Overton & Sons Tool and Die in 1968, and it remains a family-owned company located in a quiet community in central Indiana. Today we have 84 employees, down considerably from years past. 65% of our business is manufacturing tooling, plastic injection molds, and other products for exhaust systems, shocks and struts, and interior body panels supplied to the automotive industry. While we do not ship directly to original equipment automotive manufacturers, we primarily serve the General Motors, Chrysler, and Ford supply chains. These are the worst times I've seen in my 30 years in this industry. Some experts believe that possibly 30% of these small companies will not exist 1 year from now, unless the U.S. government takes additional steps to support not only the automotive manufacturers and large Tier 1 companies, but also downstream suppliers. The greatest risk to companies like ours is if a large Tier 1 shuts its doors. At this time, Overton Industries has several $1 million in outstanding receivables from jobs for GM and Chrysler through Tier 1 companies. Members of the NTMA report that payments from Tier 1 suppliers can now take over 180 days, despite a recent survey that shows GM is paying their Tier 1 companies on average within 58 days, and Chrysler within 55 days. Our overseas competitors receive progress payments and have received at least 90% of their payments before the product leaves their shores for the U.S. How can small middle market companies like ours continue manufacturing in America under the current terms? The government established the Automotive Supplier Support Program and assumed the support of Tier 1 companies would trickle down to downstream suppliers. The government should help open the faucet, because the only thing trickling down right now are pink slips. The moment a lender or receivables insurance broker sees we are involved in the automotive industry, they immediately move us to a high-risk category,
Mr. Beckman.
will not extend credit, or they will transfer us to a third-party lender. They do not believe we are bankable due to our auto industry work. Some brokers are only insuring 10% of an accounts receivable of some open Tier 1 invoices, whereas in the past they would typically insure 70 to 80%. A sample of automotive suppliers indicates that only 29% of downstream suppliers surveyed have access to credit based on receivables from Chrysler-related business, while 37% of suppliers at GM have access to credit based on their receivables. A government guarantee of the receivables allowing safe passage of tooling payments through Tier 1s to these downstream suppliers will allow access to credit. Even under the Small Business Administration's 7A loan program, lenders do not believe companies with Tier 1 automotive supplier and manufacturer receivables are bankable, meaning we're too high of a risk for creditors. In addition, the 7A program requires all holders of 20% or more of a small business to personally secure the loans, something very few of us are willing to do in the current environment. Without access to credit and without the leverage to secure payments, small family-owned companies like ours are bearing the brunt of the automotive industry's problems. I believe the federal government can extend relief to our companies by ensuring or guaranteeing receivables of businesses supplying a vehicle manufacturer which receives taxpayer funds. For example, a tooling company like ours would register their purchase order with the government and either guarantee or insure or reinsure payment under certain terms. The government, as in the case under current U.S. and Canadian programs, could charge downstream suppliers a 1 or 2% fee depending on the service provided. The federal government would make money, and Tier 2 and 3 suppliers could continue operations with the confidence that we will receive timely payment. This would also provide a significant comfort level to our creditors. The government should provide a safe passage mechanism of our receivables through a Tier 1 in the event of bankruptcy or disruption in the supply chain. The federal government has much more leverage and resources to collect on outstanding invoices than a company with 84 employees in quiet central Indiana. I cannot stress enough, this is not just an automotive industry problem. It impacts all Americans and all communities, especially small businesses. Thank you for the opportunity to testify today.
Thank